Welcome to the Daily Insights That Matter. Now, India's industrial production contracted by 4% in October from a growth of 3.5% in September due to a high base effect and a disappointing performance in the manufacturing sector. Let's look at the factors affecting the industrial production. IIP, or the Index of Industrial Production, is an index that tracks manufacturing activity in different sectors of the economy. Now, as per the latest data of IIP for October 2022, while mining and electricity saw an uptick, manufacturing saw a steep decline. Now, the IIP slipped into a year-on-year contraction due to a higher number of holidays in October 2022 relative to October 2021. The slowdown in external demand also played a critical role in pulling down the IIP growth. However, IIP exceeded the pre-COVID levels by a modest 4.5% in October 2022. This was led by a double-digit expansion in electricity and mining, followed by a relatively lower growth in manufacturing relative to the pre-COVID levels of October 2019. Now, the industrial sector is likely to benefit in the coming months from a decline in global commodity prices, which will lower the input costs. However, weakening external demand will remain a drag for the industrial sector. As a result, maintaining domestic demand becomes even more crucial in the oncoming months. Domestic demand is probably going to benefit from the moderating inflation numbers. Talking about moderating inflation numbers, the CPI, or the Consumer Price Index, for November 2022 has finally moderated below the 6% level as the retail inflation rate slowed to 5.88% for November 2022. At 5.88%, the latest Consumer Price Index inflation print is at an 11-month low. The deceleration of inflation in November was due to a sharp moderation in food prices. The retail inflation was at 6.77% in the previous month of October 2022 and at 4.91% in November last year. While the average inflation has remained above the RBI's upper tolerance level of 6% for the past 3 consecutive quarters, the measures taken by the government to contain food prices helped to bring inflation below the 6% levels. Food inflation, which accounts for nearly half the CPI basket, came in at 4.67% in November as against 7.01% in October. Fuel inflation, on the other hand, edged up to 10.62% from 9.93%. Core inflation, which excludes volatile food and fuel prices, inched up to 6.3% in November from 6.2% in October. Now, the sharp fall in inflation will come as a huge relief to the RBI, which has been on a rate hiking spree since May 2022. Last week, the Monetary Policy Committee had increased the repo rate by another 35 basis points to 6.25%, taking the total quantum of rate hikes to 225 basis points since the start of May. Now, during the same announcement, RBI Governor Shri Shaktikanta Das ji had expressed concern about the core inflation staying sticky around the 6% mark. As mentioned in our inflation analysis for October as well, with supply chains returning to normalcy and the commodity prices declining, inflation is also expected to follow going forward. So what does all of this news mean for you? While the IIP growth has contracted, other high-frequency indicators such as auto sales, GST collection for the month of November all point towards a strong growth. However, the weakening of external demand and uncertain global environment could be major challenges for the momentum in industrial activity going forward. This will therefore have an indirect neutral impact on you for time being. While we keep our reservation on the inflation outlook, as there are several factors driving it and the core inflation still remains sticky, the moderation in food inflation and the collective moderation in the retail inflation below 6% will provide some comfort in the policy setting and the interest rate action framework in the coming months, with a view to comforting both the households as well as the corporate borrowers. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.